So the problem that people seem to keep coming back with regarding order flow techniques is, I think, about having too many tools, not really understanding how to use them, which should be applied in what situations, and so on. And part of the problem is probably because there is so much information about order flow all over the place. And oftentimes people are making this subject way too complex or simply too discretionary. And in my opinion, it really doesn't have to be this way, because in a way it's very simple technique. It's just that there are so many different approaches to it that everything can get mixed up. Especially if you are at some beginning stage of learning about order flow. So as a second part of day trading from scratch segment that I recently deployed on my website, I decided to record this video and upload it on YouTube. And hopefully some of you will find it useful. So even though the core of my analysis is based on things like options flows, macro positioning estimation, etc., especially while day trading, though, I will use parts of order flow techniques simply just to confirm my bias or a level that I'm interested in trading, or a zone, or simply use this technique as a primary entry and exit, because I can see sometimes there are really nice opportunities in the market just solely based on order flow. And you can trade it just without any other fancy stuff and just use these order flow techniques that I'm going to talk about, and probably you'll be just fine, and you can master it, you can tweak it as you wish. So in this video I'm going to use a regular Sierra chart. We're not going to get into the DOM, we're not going to get into the tape, time and cells. We're going to simply use a very standard footprint chart with cumulative delta in the lower panel. And as far as footprint goes, we have the imbalance here. So here are bids and asks. So the green imbalance is 3 times larger diagonally than ask than bid, and it's green. And the yellow one is the imbalance, the selling imbalance. If you want to have exactly the same chart as I have here, then you can go to my website, emini.today, and go to day trading from scratch. We already have the first part of the material there, and now I'm gonna upload this video. This one's gonna be free for everyone, but there will be much more interesting stuff, especially for people who are still looking for their method, for their approach to the market. And hopefully this one is going to really help you visualize and understand what's going on and how to find pretty neat opportunities. And I'll be using not only ES, because as some of you know, I mostly use SPX and ES, but with Orderflow, what's nice about Orderflow is generally you can use it on any market you want. If you have volume data and transaction data, then you probably can use the same technique. Maybe you need to set up your chart a bit different because some instruments have different parameters, tick sizes and stuff, a bit different characteristics. But I will show you, this is $0 futures on CME. And so I will show you that it works really nicely on currency futures, but it will also work on oil futures, gold, you name it, indexes, obviously. So let's get started. Again, if you want exactly the same chart book and indicators, which I'm going to use here, which are not standard, but you can build it yourself. Like for example, these stacked imbalances. I will show you later the indicator that I'm using for this. Then you just might want to go on my website and join the day trading from scratch and go through these steps that I'm proposing for anyone who is still struggling with some simple techniques. Okay, so let's start with the meat. So first of all, I'm not going to explain in detail what is cumulative delta, what are bids and asks. I mean, you can find it on internet. There are tons of good videos, good materials, good papers on this subject, and I assume that you already tried some order flow techniques, you already read about it, you already tried it on your platform, but you still, for some reason, cannot find a consistent methodology or a consistent way of using and utilizing these pretty powerful information. So first of all, the one thing that I will wrap around all the information here is the thing that I personally like the most in order flow, which is absorption. And absorption is important because it clearly divides visually the aggressive participants of the market and passive participants of the market. And the rule of thumb is that passive participants in the market are the strong hands. And this is not always the case, but we can assume this this rule, and in most cases it will be actually true. So basically, when you look at the cumulative delta, what you see here is the interaction between passive and aggressive traders. And to be more precise, if you look at the cumulative delta and relation to the price itself, you will see this division between passive and aggressive traders. And what I mean by that, well, If you look at the cumulative delta shape, you can see that it's going up. So the aggressive buyers are there. And what the price does, it also, most of the time, will resemble the shape of the delta, of the cumulative delta, right? So there are aggressive buyers and the price is going up. And it does that in most cases until one point when we can zoom it a bit in. And you will see that at some point, even though the cumulative delta is still going up, so right here, look at this this candle here. It makes a new high, so there are more aggressive buyers who are hitting the ask, and you can see that price stalled and doesn't make new high, right? So this is like a very visual explanation of the very simple phenomenon, which is absorption, right? So you have buyers coming in, hitting these asks, but there's someone in this area here who is simply absorbing these buy orders with the sell limit order. And he probably, if you would look at the order book at that time, you would see some reloading and the thing that is oftentimes used to describe the how the passive large traders are acting. So they are absorbing these buyers, so weak hands. We can call them weak hands, but not in the sense that they are bad traders or something like that, but oftentimes they are they will lose. Most of the time they will lose when they face participants who just are able to absorb large amounts of contracts. Okay, so this is very visual approach, without order book, without the depth of the market, just simply looking at the cumulative delta going higher, making higher highs, and price making nothing more than just sitting at the same level. Yeah. Okay, so let's go find something some more examples of this situation. So this was the end of the up move, because then the market dropped. It was on last Friday, and the euro just broke down. So let's go the day before, and I will explain why I'm not cherry picking, because I am looking for this at specific time windows when it is much better to look for absorption, and this I will explain more in detail later on. But let's look. So here we have the end of the session. This is the morning, European morning, and what we have here is totally the same situation. So we have a rising cumulative delta, we have a rising prices, and at this point we have a new high on price, and we have a new high on the cumulative delta. But at this point here, this is the candle that changes our view, is this made a new high, but the price is already a few ticks lower, so there was no new high, right? So again, we have this absorption here in this area, right? And it means that there was a seller, the passive seller, who absorbed all the buying which happened here. So we can look at the volume. We can see that the volume was actually pretty large compared to the periods before. So almost 2,000 contracts, over 2,000 contracts. So there was a lot of interaction between the aggressive buyers and the seller who was sitting there and absorbed all this buying here, and the market just dropped. Okay, so let's go to European Open day before, and you can see a pattern that I'm looking for these absorptions around European Open, or to be more specific, after the European Open. Okay, so the orange line is European Open, so I will look for what is the situation before the Open, and right here you can see that there is a possible absorption here, because you can see that there is a high and there is no new high in prices. So it's still some kind of a opportunity, especially if you, for example, have some kind of a level here that you wanted to confirm, or you have a bias that you wanted to confirm, then sure. But just a few minutes later, and this is the Open, you can see that there happened something else. So the delta made a new low right here, and the price did not, right? So before they started to buy, there is a nice divergence. Let's call it divergence, but it's the absorption. So there were more sellers who couldn't push the prices lower. So that's why you have a new low on delta and no new low in the price, which was confirmed by this up candle, because up candles are the blue ones, and these violet are down bars, because you don't want to anticipate this. You just wait for a confirmation. In this case, this is a very simple confirmation, which I'm talking about, and it's just the up candle, right? And we have European Open, and again our setup. So it's the third day in a row that the same thing happens at the same time window, and you can have your trade to the upside, right? Let's go day before this at the same time window. Here we have market opens in the night, and here is European morning, so 3 a.m. New York time. We look at the action, in the night preceding the European Open, and what we can see, well, there is definitely a lot of selling, a lot of aggressive selling, and price is following aggressive sellers. And at some point after open again, you can see that the delta is making a new low, right? Price made a new low here also, right? But then the delta is still moving lower. So sorry for that. Sorry for my dog. But the price is moving higher. Okay? Yeah, she's gonna bark from time to time. Sorry for that. So the delta is moving lower. So there are aggressive sellers. But somebody is not only absorbing here in this area, but they are moving with their orders aggressively higher. So let's say they were absorbing this, aggressive sellers coming in, but they're absorbing it aggressively. You can absorb aggressively if you have a lot of money on your account, obviously. So again, the same situation at the same period of the day. In this case, this is passive buyers absorbing the sellers, so trapping the bears. This is a bear trap. Let's go the day before this. Okay, this one's different. So we can see that the European Open is here. We had a lot of action in the night. And where we at? So again, falling cumulative delta, which means aggressive sellers. Price follows this action here. Okay. And now what happens? We have a new low in price. Okay. There is no new low in the delta. And this is very important. There are two types of divergences. The first one, which I showed you before in these three different examples, is when there is a hidden divergence. A hidden divergence is exactly this situation, right? So the price starts to move up while the delta is falling down. Now notice the difference here. The difference here is that the price is still moving lower, but the delta is not moving lower. And this is the type of action that I'm not interested in, okay? I would be interested in if you see the price didn't make new high, and that delta would make new high. So basically, if I see more effort from aggressive buyers or sellers, which is not confirmed by the price, then this is the hidden divergence. This is the absorption. But in case when you see more effort from the price and not so much from the aggressive sellers or buyers, like in this case, then I'm not interested in this. Okay, this is not absorption, and this is something that I've noticed a lot of people have a problem with. There is a difference between absorption and simple divergence between price and cumulative delta. I will show you more of these situations in a minute, but notice the difference here. So we have new low in cumulative delta, and price didn't follow. So we have more effort made by aggressive sellers in this case, and it is not confirmed in price, meaning here is a buyer, a passive buyer, right? There's no other explanation. This is like a basic mechanism in the market. There are a lot of sellers here who are actively hitting bid, but there is someone who absorbs this. Now compare this to this situation here. It's different because there is no effort from sellers, but the price makes new low. So in any case, this is more bearish than bullish, right? But as you have seen, this is actually it's not something that I would trade. This is not a signal for me. This is not a setup. I want to see larger effort by aggressive buyers and sellers, and a little effect they do, rather than something opposite happening in the market. Okay, so that's the difference. Let's see. Oh, I don't have more days here, but let me show you one more example of the difference between a hidden divergence and a regular divergence. Okay, before that, you can see that there is still a new low coming in from the delta, and the price is barely moved. It didn't move to new lows. There is definitely someone absorbing these cells here, right? And again, there is more effort by aggressive sellers, and there is no effect, no visible effect in the price. And this is what I'm looking for, right? Let's see some divergence, regular divergence, just to show you the difference. Yeah, here it is, for example. So you have a new high, right? This is new high, and this is a regular divergence. So basically, it doesn't interest me. Okay. This is a much. I'm not saying that you shouldn't use this. Is in the context I'm talking about, and in these specific time windows, there is a more chance that the bulls, aggressive bulls or aggressive bears, are going to be trapped, right? And this is why in these periods I'm not gonna, especially on currencies and European Open is the one time window I'm going to use. Then there is a different window I'm going to use for indexes. It doesn't mean I'm not going to, I wouldn't trade with this pattern in indexes before US Open, for example. but I would go for indexes around US Open, so maybe starting at 8 a.m. New York time. So after the action in the currencies, I would look for patterns, for these patterns in indexes. Okay, so what's the next step? So we have a window of when we want to trade it. So for currencies, we want to trade around European Open. For indexes, around US Open. And what's the next step after we locate the possible potential opportunity to get in the market because of the absorption? Well, we need to have some kind of confirmation, right? So what I have here, these green and red zones are nothing more than stacked imbalances. So basically the stacked imbalance is when we have diagonally bearish imbalance is when the bid is greater at least 3 times than the ask diagonally, and it will mark these 3 prices because we have 3 in a row. So these are stacked imbalances. So when there are at least 3 prices with 3 times larger amount of bids or asks, it will simply just draw this box. And how I use it? Well, simple thing is, so first we locate the our divergence, right? So we located it here, right? Aggressive buyers are coming in, they are buying more and more, they're making new highs. So it means basically that there are much more aggressively bought contracts, but the price is doing nothing. I mean, it's not following the cumulative delta. So a lot of effort, and the effect is very poor. So you can get in just with a red candle like this one, but I prefer to have a bit more confirmation, and it's still, again, order flow confirmation, so I'm not using anything else than just the footprint. When I see this stacking of aggressive bids, I will simply go short, and this is my entry, right? Right, so here is our entry, and basically above this candle is our stop. So this is just few ticks, right? So you're not going to get this signal every time you have the absorption, but I just prefer to have a bit of more confirmation and exact entry point in the stop loss, rather than just using simply falling or rising candle. And the other thing is that it is actually confirming this situation, because these sellers, or a seller who was here at some point, he will have to push the prices aggressively, and this is probably what happened here. So he absorbed the market here and then pushed with aggressive selling the market lower, and then he moved his orders somewhere here, and you can see that the buyers are not so keen to get him out, because they were shooting at him in this area, and they are out of bullets probably here. So this kind of setup is, for me, it's a high probability setup in the order flow realm. And like you can see, it's rather simple one. There's nothing special about it. It happens in a window. It's a clear situation where you have rising aggressively cumulative delta, and at some point the price stops and you see a clear accumulation, and then the confirmation by aggressive selling. So this is the general description of this setup, right? And also you can see this volume spike, right? So this is the last new high. The next candle doesn't do a new high, but the delta does. And this is what you want to see in the volume, right? You can see that you have few hundred, 1,000, 700, 1,000, and boom, you have 2,500, over 2,500 contracts traded here. So this is where it starts to happen, right? And you can get in aggressively, but I wait for confirmation, but it's up to you. So now imagine that there is not only order flow setup here. Imagine that you have some kind of a level here, or a zone that you are expecting price to reverse, or you're expecting some kind of a major resistance for the price because of the tools that you are using. Then you have like a golden setup, right? And actually with this euro, this was exactly the structural level, which I'm going to show you in a minute. Right? So this is the price that I'm talking about. This is the resistance that I will show you in the segment of day trading from scratch. I will show you how to really simply, in really simple manner, make these levels, find these levels. This is trading with a trend, because we have some kind of a trend here, and these are really very, very precise zones where we want to get in. So once we see the price approaches this level, we simply are looking for this absorption here, and we have a confirmation, and the rest is history, right? And you can see that this stocking of bids actually were approached once again an hour later or so, and yeah, this is how it worked. So level which you derive from the structure, which I will show you how to do it in day trading from scratch, and this technique which you can build on your platform easily is, in my opinion, for day trading, this is something that you actually can make money, because the first thing I showed you and the starting from scratch, so the automatic strategy, which just trades 2 times a day and scalps, was, like I said, it wasn't meant to make a lot of money. It is actually something that has a small edge, so about 60% of accuracy, right? But it was supposed to teach you the consistency, right? So focus just on 1 minute and act according to a plan. Now, the second part is something that can actually make you money. And if you follow it as I explained this to you, and also used the levels, which I will show you how to find, or you have your own analysis and you just were looking for some kind of confirmation, do this. And it works on any futures market. I will have the chart books in day trading from scratch for currencies that I'm trading and for indexes, so ES and NASDAQ. But if you would like to have more templates, just DM me in the group. And for those who have access to day trading from scratch, I will prepare specifically for a given instrument. I'm just watching this on NQ, ES, Euro, and British Pound. But like I said, it can be done on any instrument. Yeah, so yeah, the same situation day before, right? So we had this rising delta here, new high, right? And price was absorbed, and here is our entry, right? With the stop loss like few ticks above this candle, right? And you have same situation, exactly the same situation. They have attacked the it was actually 8:30. It was a CPI, I think. Yep, look what happened. This was someone who, I don't know, you could say that someone knew, right? Someone was absorbing euro here. And I wrote about it in the group on Discord, that somebody is absorbing euro here, a seller, right? And look what happened. Same situation as the next day, but the magnitude of this movement was much larger, right? So yeah, I mean, okay, so you can see that in this, for example, situation, we didn't have a confirmation here. We didn't have the green stacking, right? So we wouldn't get in this trade, right? Maybe we would have some level here, or maybe on a British pound, or Canadian dollar, but not on the euro. Here's a beautiful example, right? You have 3 a.m., so 3 days ago, 3 a.m. We have the absorption. We have a buyer here. For sure there is a buyer. And here is our confirmation, right? Here is a stacking. We have it here, which is old, but I wouldn't use this. But this is a clear confirmation, right? And again, look what happens. So yeah, this is something I'm uploading it on YouTube. It's for free. I hope that people are at least some of you we'll look at it from a bit different perspective now, and we'll try to use it. And maybe, because I understand that it's not going to fit to everyone, but I'm sure that some of you will now say like, wow, it's, you know, it's kind of simple, right? Because, you know, most of trading is simple and should be simple in sense of the analysis. Mentally, it's a struggle. Like, we all know this. For most people, it's a struggle, and we are trying to deal with it in different ways, right? We trying to figure out some exercises like this scalping thing, which is not about making money, but, you know, to, you know, teach yourself a consistency in the face of a market which is unpredictable. So handling the unpredictability is like crucial, right, in trading. Mentally handling the you know, uncertainty. This is very important. But as far as analysis goes and order flow, I believe that this is everything you need to have. So thank you for listening. As always, it took much longer than it should. You can probably watch it on 2 times speed because I speak so slowly, but I cannot change this. I tried. So see you in the next one. Again, if you're interested, like, you really don't have to, but if you're interested in stuff that I do, you can support it. The big thing, one of the, I don't know, but this is like for me, it's the biggest thing I've done so far. The American cycle is going to be out probably in about a week, and it's amazing. It's an amazing thing. A dashboard is still in the research, but already it proves to be a great tool. Terminal access with intraday tools, and now day trading from scratch for those who are still struggling or just want to learn something new about order flow or a bit of new approach. So you can check this out, support my work, and thank you all for supporting me. It really gives me a lot of kick to research, develop, and it's, you know, a lot of these things that I share is thanks to you. So let's keep it up, and see you in another video. Cheers.